India is a country of festivals. Because of the diversified culture, we get to see here a lot of celebrations, especially during festivals and other occasions like wedding, anniversary, birthday, and so on. Also, it is quite common to exchange gifts during these celebrations. But have you ever thought about paying tax on these gifts that you get? Hello and welcome. Today let's decode taxation of gifts that you get. We are going to see the tax treatment of these gifts as per the Income Tax Act. Are there any exemptions? And in the end, the key takeaways. For the purpose of income tax, we can classify gifts into three different categories. First, gifts that you receive in the form of money, be it cash or credit to your bank account. Second, immovable property like plot of land, flat, house, and so on. 3. Movable property. This would include shares and securities, jewelry, archaeological collections, drawings or paintings, sculptures, work of art, bullion, and recently even virtual digital assets have been added to this particular category. That is cryptocurrencies like Bitcoin, NFT, and so on. But in today's video, we are going to focus only on the first category, that is monetary gifts. If the total value of the monetary gifts that you receive is more than 50,000 rupees, and this limit is for a financial year, if you cross this threshold limit, then as a receiver, you are required to pay tax on the entire amount that you have received. You may get this money from one or more persons. Let's say you have received a monetary gift of 30k from one person and the other person has paid you 25k. So you have received a total of 55k. You need to pay tax on this entire 55k and rate of tax would be as per your slab. That is, if you are in 30% tax bracket, you need to pay 30% tax. If you are in 20% tax bracket, then 20% tax and so on. To put it differently, if the total value of the monetary gifts that you receive during the financial year is up to 50k, then the entire money is going to be exempt for you. That said, there are some exceptions to this. That is, in some situations, even if the value is more than 50k, you would not be required to pay any tax. Let's see what are those. First, gifts from relatives. Relatives here would include your spouse, your siblings, that is your brother or sister and their spouse, siblings of your spouse, that is your brother-in-law, sister-in-law and their spouse, then siblings of your parents, that is your aunts and uncles and their spouse, then any lineal ascendant or descendant and their spouse, that is your grandparents, your parents, your children, including adopted children, your daughter-in-law, son-in-law and so on. Then any lineal ascendant or descendant and their spouse of your spouse, that is grandparents, parents, children of your spouse or daughter-in-law, son-in-law of your spouse and so on. So if you get monetary gifts from these relatives, even if the value is more than 50k during the financial year, you still don't have to pay any tax on it. 2. Gifts that you receive on the occasion of your marriage. Here the giver can be any person. Even if the total value of these monetary gifts is going to be more than 50k during the financial year, it is not going to be taxable for you if it is received on the occasion of your marriage. 3. Gifts that you get by will or inheritance, that is going to be exempt for you. 4. Gifts that you receive from someone who is at the deathbed, that is someone is going to die and you get these monetary gifts at that time, that is going to be exempt for you. Fifth exception is actually COVID-19 pandemic induced exemption. Any money that you receive towards medical treatment of illness related to COVID-19 is going to be exempt from tax. Now here the giver can be any person and it has to be for medical treatment either for you or for your family. Family here means your spouse, your children, your dependent parents or dependent siblings. Here, the actual money spent for medical treatment is going to be exempt from tax. Let's say you have got 10 lakh towards medical treatment. Out of this, you have spent 8 lakh. So, you would be required to pay tax on the remaining 2 lakh. But if this medical treatment is not successful and if the person dies, then money received by family is going to be exempt from tax. Here, if the giver is the employer of the deceased person, then there is no limit as such. Any money that is received from the employer of the deceased person is going to be exempt. If it is any other person not being the employer of the deceased person, then up to 10 lakh. That is, money received up to 10 lakh is going to be exempt in the hands of family members. And this money should have been received within 12 months from the date of death. So to sum it up, if the total value of monetary gifts that you receive during the financial year is more than 50k, then you would be required to pay tax on the entire money that you have received, unless you are not into these 5 exceptions. First, receiver of these monetary gifts would be required to pay tax. And receiver here can be a resident or non-resident. So even if you are an NRI, you would be required to pay tax if the total value is more than 50k during the financial year and you are not into these 5 exceptions. Second, receiver can be a resident or non-resident. So the residential status of the receiver is not going to matter when it comes to taxation of these monetary gifts. 3. Monetary gifts that you receive only on the occasion of your marriage is exempt from tax. If it is received on any other occasions like birthday, anniversary and so on, it is going to be taxable for you. Last, monetary gifts from friends. This is going to be exempt if it is received on the occasion of your marriage. Otherwise, it is going to be taxable for you. That's all I have for you today. Thank you for watching.